Welcome to Corey Properties. I'm the team lead here at Corey Properties. We have some of our agents here. We have Hillary, the loan lady, is here to talk to us about rates and everything that's going on in our market. Briefly, we have Phyllis Hall, one of our associate brokers. We have Kent Calgard, Carter Craig, we have Linda Douglas, Carol Carr, and Susie Sheffield. I'm going to turn it over to Hillary and let her give us all the information that's out there.
Thank you, Fred. Okay, so I did a little bit of research before I came in today, and I watched this really cool thing on YouTube, and it was Enhancing Communication and Overcoming Objections with Renee Rodriguez. And I'll send you guys out the link after. He's a behavioral scientist, and so his approach is looking at how people tend to just jump on a bandwagon without any real data behind them. He also was talking with Barry Habib, who is a mortgage market expert. When Barry talks, he can give you like hours of information in like 10 seconds, right? So I'm breaking it down into a more simple, understandable version and just going to give you guys a brief overview. And then I've also shared some slides with you. So interesting data that I have. This is national because we're very zeroed in on our market, which is usually better than national. Right now, we have very, very low inventory. For March, there were only 563,000 active listings in the entire United States. Do we know what the local number is, more or less? Yeah, I'm just curious, like, to compare what percentage San Antonio has of that. But if you take 563,000 listings for the entire nation, that's a very, very small number. The listings are actually up about 60% from February. So we've felt this surge, but it's still very, very restricted. If you look at pre-pandemic, we're probably half of the average, right? So still operating on low inventory. Black Knight Home Price Index reported that home prices actually rose 0.2% in February. So because of that low inventory, our prices are holding steady. And so what's one of the things you guys are hearing out there from customers or potential customers is that are they waiting for prices to drop, right? Are you hearing that? They're waiting for the market to crash. Thank you. That's, yeah. And that may not be true this time. And so I'm going to give you some statistics that will help overcome that. And so more than ever, like as loan officers and realtors, we have to play kind of that mind game with our customer where we're leading them to come to that conclusion themselves that because there's low inventory, the time to buy is now. And so that's what we're going to talk about. So here's another, so this is how Renee Rodriguez on that video kind of walked us through it. And he got me extremely excited when I listened to it. And I told my husband, I'm ready to go buy a bunch of rental property like right now. And then he was telling me that dollars are devaluating and I probably shouldn't because I still have to work on him a little bit, but I'm going to go buy. So the first question we ask our customers is, do we look at housing like day trading? Or are we looking at it as a long-term investment? Because that does make a difference. If we're buying a house for a quick flip, maybe today's not the best time to do it. But I think the majority of our buyers are looking at housing as a long-term investment. They're gonna Airbnb it, they're gonna live in it. There's some holding period involved with that investment, right? And then the next question you ask your client is, have you heard of herd mentality? Right? Do you know what it means? Right? Most of them do. So someone answer that for me. Do we know what herd mentality is?
Jump on the bandwagon with everybody else.
Right. Do you follow the flock or do you like to do your own thing? That's a big question. And so do you believe that what the herd is doing is always better? no, right? And so now that they've affirmed that, now, not following the herd, can it be a little scary? Yeah, because there's peer pressure still, right? I think it's worse when you're a kid, but we still feel that, right? Where people are going, why are you doing that? So if you zoom in on the data and you look at the last 3 months, okay, maybe you see this trend of gloom and doom. And who likes to promote that? The media? Right? You read headlines and they're latching on to this because they want to evoke emotion. They want that's how media, promotes itself. So if you back up and you zoom out on the data and you look at the trend, this very first slide, what you're going to see is that housing from 1942 to date, all of this green is appreciation every year. And again, this is national. I think our local data is even stronger than these numbers. And there's only a couple of times where maybe we lost a little or stagnated. I want to say in 2008, here in San Antonio specifically, we were not at a 12% loss on value. I mean, who remembers? I feel like it was only like 2 or 3% max, if that. Right? And it was only certain neighborhoods. Some were just flat, right? But we got out of it really quick. If you look at that very next slide, before we hit bottom, like in a market, it does this, right? So we're kind of here on this slope, right? And sellers are a little fearful, right? They want to move their inventory faster, right? Because they remember when rates were 2% and it went really fast. Now it's sitting for 30 days and they get nervous. But there's less competition. When the market hits bottom and starts changing, right? So prices continue to go up, there's more competition, sellers are more confident, right? So they're gonna hold out and say, I'm not paying anything. I'm not gonna make a deal with you. I'm gonna price my house the way I want it, right? So a better time for someone to buy is now. Because if you wait, you're going to have more competition. And then people say, I want to wait for rates to go down, right? I'm waiting for rates to go down. I'm waiting for prices to go down. Well, I don't think prices are going to go down. It looks like they're going to continue to go up. And especially if you look back at that first slide, I mean, it's a pretty sure bet that overall we're going to appreciate in value, right? And especially as the dollar becomes less and less, I mean, houses are going to have to be more money. So in 2012, when we came out of that dip and started appreciating again, we had 8% appreciation nationally that year. And look how much inventory we had. This chart is talking about how much inventory. Now, our inventory is probably here, like half of this last bar, based on the 573,000 listings. So what do we think is going to happen to appreciation as we start coming out of this? It's going to go through the roof. So now is the time to buy, right? And if you just walk your clients through this logic, I think you can help build that excitement back up, right? Like these are really good talking points, and really, it's just how to use this market as an opportunity to create more sales, right? So rate is less relevant, because if we truly believe that rates are coming down, then we can refinance. Every lender in town is offering free refinances, right? We're waiving lender fees. We're going to use the existing appraisal, or we're counting on getting appraisal waivers. So if you've got that, then why not buy today and lock in your price? So that's really the bottom line, and hopefully that's what this data will help you.
Okay, so I have a question. So
Yes.
use existing appraisal for a refi?
Mm-hmm.
Okay.
If we're refinancing within 6 months, we're going to use the appraisal we have on file. So that's where some of the,
But that's within 6 months.
yeah, or a waiver. Sometimes if there's enough equity, we're getting waivers. And again, if our values are going up, I had a girl several years back who bought a house And she put 3% down, first time buyer. 15 months later, she came back to me and her home had appreciated because she just caught it right. But it had gone up enough that she was able to drop her PMI. Her private mortgage insurance went away, right? 15 months later, like, again, she made out like a bandit because she jumped in and her payment got better 15 months later. Her value went up. She's sitting on equity. So it's a really good, I think it's a great investment. Yeah. What kind of questions do you guys have?
So when she did that, did it cost her anything?
No, you just call your servicer. So
I'm
who?
just like wondering like if it's equivalent to like say moving your credit card debt to another, you know, if that's gonna be like the next thing in mortgages, like, hey, just move it over to us and we'll,
And we can drop your PMI.
Yeah,
we
or
can.
something.
Yeah, so you can refinance or you can recast, right? So recasting is when you're not paying a bunch of extra fees and you're just putting a lump sum of money down. So a lot of people will use the recast feature when they have a departure home that they're selling after they move, right? Because a lot of people want to move first and then they put the other house on the market and you take that equity and you put it down on your loan that's already in place, and the mortgage servicer will actually drop your payment based on the new balance and your existing rate. So you don't have to refinance.
Is that an equity buyout?
And it's just called I just lost it.
Recast?
Recast, thank you. It's called a recast. So versus refinance. And so some servicing companies will charge like $250. Some are free. Some have minimums, like you have to put $50,000 in. So it depends on the servicer, how they're set up and the way they view recast. But I'd say 95% of the servicing companies offer that, and nobody knows about it.
So it
So-
lowers the payment because the principal is
Because the
higher.
principal
but
went
the
down.
interest rate is, and like
Yeah.
the terms are still the same.
Right, so you're not refinancing. So if the market's not changed enough for you to justify a refinance, right? Because, so and then I would just also say, like, for the refinance, like, if we don't really know, right, if it's going to be 6 months or 3 years, or, I mean, at some point rates will come down, but we don't really know. Like, we're hoping. But 6 months ago, they were saying this spring we would be at 5%. So I'm really careful about promising somebody a future rate because we just don't know. I always tell my customers I need you to be comfortable with your payment today. And of course, if there's an opportunity in the future to get something better, great. I'll help you do that. I'll waive fees, all of those things. But if you're not comfortable today, I don't want you to buy with that thinking you're going to be able to do this as an absolute, right? So I'm very careful about saying that or promising that or having you guys repeat that. So I would just be careful with the, I would rather look at this data and say, let's not follow the herd. Let's seize our opportunity. What was that first piece that Beth missed? It was, hold on, I have to look at my notes. Do we look at housing like day trading, or do we look at it as a long-term investment? Like, that's the big question.
And that's hard
So,
for young buyers, because
to understand
when
it.
you look at what they do retail-wise, they have that afterpay. I mean, you want to buy a T-shirt for $24, you do it in 40.
Repay-
You know,
yeah, full
I
payments.
mean, like, seriously?
Yeah.
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 So I'm open for questions. That's all I really have. I just, I wanted to share the market. I would say rates are probably somewhere right around 6.5.
So if we're writing an offer, just put like 6.5.
You might still,
6 3/4.
well, yeah, you might want to still put 7, but
Tomorrow, who knows what'll
I
happen.
know.
it's been so volatile, right? And, yeah.
I have a client that was the exact scenario that you just said. They bought, and they have their other house on the market now.
Mm-hmm.
They bought and moved, and they bought with an arm.
Mm-hmm.
And then when they sell, obviously they're gonna explore the options there. They have a tremendous amount of free capital to do whatever. Is that what you're doing? Are you doing a lot of arms and then a refi?
Well-
Refi or go to conventional,
You can, right? So an ARM sometimes has lower interest rates, and there's been times in the past where an ARM rate was so much lower that you could really, recover some cash flow. Right now, I would say there's been days where the ARM rates were actually higher than my fixed rate. So in that case, because it's what do you call it? It's like a reverse market. So our short-term bonds are trading higher than the long-term, which makes the long-term rates better. So when it's upside down like that, then the ARMs don't really make sense. But a lot of times it does. I would say more, like when you look at the history, more times than not, the short-term rates or short-term bonds will trade at lower rates than the long-term. So.
Have you seen any issues with appraisals lately?
Yeah, so appraisals, I'm okay so far with appraisals. I've been surprisingly okay with the appraisals that are coming in. So, and I've seen it a couple times where the agent I'm working with has said, I'm not really sure because it looks like prices are trending down in this area. And so far I haven't seen a lot of discrepancy.
Are they coming in purchase, or are they coming in higher?
No, well, I have some that are still coming in higher because I think there's still comps in the last 6 months. Again, if you go back to that first data I shared, prices have only come down like that 0.2, well, there were two different indexes, 0.2 to 3%, and that's since the beginning of the year, right? So you just have this tiny little dip down. I don't think it's enough to really justify those low appraisals like we've seen in some years, right?
We had
So,
one yesterday, and
I
it's
can
a VA,
remember.
so then we're doing the Tidewater, but
Yep.
it was still, the house was priced right. I don't know.
yeah, you just have to. So
Where
yeah.
you go in and argue your.
Yeah, VA has it's called Tidewater when they don't hit the value, but I've also seen some VA appraisers use Tidewater just to buy themselves an extra
That's what we
day.
think. He probably didn't have time to
And
pull
get-
comps.
and get the
because
comps.
If he would have pulled the comps.
But
it
did
would've
you
been
guys
fine.
give him the comps? Because so when the VA appraiser calls Tidewater, the lender is supposed to call the buyer's agent and the listing agent and say, we have, I need comps right now. And we send them in and we send them back to the VA appraiser, and then they just finish their report. And usually we get the number that we want because,
We did that yesterday.
yeah,
Did anybody get
How
the
far
number
did
that you
they-
wanted?
How
no.
far did they miss?
He never went out, okay. I'm asking because I just accepted, and it's only the second VA.
Right, but he didn't tell you he was low. He just called Tidewater, right? Or
I
did,
think he told them that it came in.
Identical house,
Oh.
and this one had a pool.
He was a
and
little
they,
off.
I think
recently installed
Okay.
Yeah.
$1,000 outdoor
Because
kitchen.
he,
And they
the
still
agent
were
just
like-
went, it didn't appraise. I said,
Okay,
okay,
that
then
costs
Tidewater,
more
let's
than
pull
the one
these
that-
things.
Yeah, and the guy was like, you're not using the right comps. He said, those are over a mile away. And I was like, no, they're not. It's in the same neighborhood, and it's literally the exact same house.
Well, I'm nervous
And
because
they-
my VA.
so those are better comps,
How much
yeah.
did they miss?
It's
by?
already hard at the
VA
lake.
or,
To do a VA?
No, it's already hard to do comps at the lake
So-
because each property, how do you put a value on a view or water access or, but I mean, it's a good offer. And we took it, but I'm like, it's a VA.
Yeah,
so
you know,
it's
lately, especially
Plus.
right now, just because the market is as hinky as it is, I've been taking comps and having a list of the upgrades and like all of that, and I just go and take that to the appraiser.
Yeah.
Absolutely
Yeah.
gotta do that, but I'm just like.
Yeah, and the VA appraisers right now, I would just say like 90% of them are, again, if they call Tidewater, they're not giving you a value yet, right? So they're calling Tidewater because they want you to give them the comps, right? And 90% of the,
They called.
They
they'll,
tell-
they'll, like.
they tell us.
How
They
much?
email us and we just,
Oh, you don't know? Okay, gotcha.
that's what I'm saying. So someone assumed that it came in low because he called, it may be that the appraiser was having trouble making the value, that's what it's for. But I've seen a lot of times where they're just waiting for us to give them the comps, and then like 24 hours later, you have an appraisal, it came in at sales price, they agree with what you did,
Yeah.
and
Okay,
So,
because I was like,
yeah.
with this one, we ran so many comps.
Yeah.
I know, I'm like, it's priced where it's.
so I'll tell you, VA is the one that we actually know who the appraiser is up front, right? It's not, with all the appraisal regulations, right, and that you're not supposed to know who you're working with, the lender, until after you get the report, VA assigns the appraiser. I have a form as soon as the appraiser is signed. I have their name, I have their number, I have their email, and so we know who to communicate with. And so if you're working with me on a VA loan, I'll pass that name on to you. So that way you can give them your comps and your CMA and all that stuff up front and just say, hey, I just wanted to share this with you. Let me know if I made a mistake, whatever. And
And then
yeah.
I know you have,
Hope they're lazy and yeah.
and I know not every house has to have the appraisal, correct? Like, I know that you're working with, on
Right.
one right now that you're like, no, it qualifies.
For a waiver,
Yeah,
right.
so what's,
So a lender waiver, it's never going to be on a VA loan or an FHA. Those always need an appraisal, right? So conventional 20% down or more. I've got a system, it's called Hawk, that I can go into and verify an address before we even, yeah, like I'll know, like if you call me and say, okay, we're offering $550 on this home, I can plug that in and the buyer's loan amount, and it'll tell me if I'm going to get, if I'm highly likely to get a waiver or not. And so, I mean, that's nice to just take that whole piece out, and then we can like accelerate that into a very fast closing, right? So which again, if we start seeing more multiple offers, that's going to be like something you have in your pocket too, saying, well, we can close in 2 weeks. Definitely, right? Because I know I don't need an appraisal. We know title, you know, we can push them.
Yep.
So that would be the only thing we're waiting on.
And the anxiety.
We're just,
Yeah.
yeah,
I have a question about, what's it called, HELOC? What is it? Yeah.
HELOC.
Explain it.
So HELOC means home equity line of credit.
Yes.
And it's a second lien.
Right.
And in Texas, you're limited to 80% of your home's value. So if you're,
Remodel, yours.
it's for whatever you want.
Anything.
It's a line of credit.
anything.
It works like a credit card, and your home equity is, you do.
It's 80% of the value?
Yeah, so,
Equity.
Carol, it's not a lump sum, you draw.
yeah, no, it's like a credit card. So okay, let me tell you how it works. So let's say your,
Second lien, so it's,
yeah, let's say your home is worth $1 million, right? And let's say you have a $500,000 mortgage. So 80% of $1 million is 800 minus your first lien of 500. You have a $300,000 amount that could potentially be a HELOC or a home equity line of credit. And when you have zero balance, you have zero payments. When you have a balance, the payment is based on the prime rate, which I think is 8 or 8.25 now.
oh,
Right, plus a margin usually. Or sometimes if you have assets with that bank, they give you a credit. Frost still does them. I've got 1 or 2 lenders that will do them. So they're, yeah, some of the local banks do that.
So who
And,
determines the value of your house?
they either, depending on their process, they either just check like the tax records, or they've got some other way that they do like a CMA type of thing, or they do a full appraisal depending on the line amount and the lender. So
Someone was asking that the other day.
Is there
Yeah.
a wait period after like a primary mortgage and then you do a remodel?
I believe you can only do cash out once a year. So every 12 months you can do another, like you can reset your HELOC. Like let's say you had 300,000 of equity, but you only set your line at 100. And you maxed it out, or you want to remodel something else, you can refinance it, right? So
It's just like a credit card.
yeah, it's like a credit card, but the rate's going to be a lot lower. I've seen people like back from my bank days where they would take these high interest rate credit cards, because your credit cards are usually what, prime plus 10 or 12. So you've got a much higher interest rate on their credit card, and they would consolidate it into a HELOC and pay those cards off in 18 months. Because if you're paying $1,500 a month to cards and you can drop the rate and you can keep paying that much, you can really knock out some debt, right? So, or you could use it for remodel, or like we opened one just for rainy day funds. You know, I just wanted it, right?
Yeah.
So what if something,
Why not?
a really nice vacation, that safari that I was planning, I don't know.
But if you do it and you don't draw anything, you don't pay it. You're not getting charged anything.
You're not
It's just
getting
sitting there. You just
Right,
have,
so-
it's a security blanket.
Yeah, but I think if you don't use, so usually it has like a 10-year open period. After 10 years, if you do have a balance, it turns into a mortgage, right? So it becomes just a fixed rate payment to be determined, interest rate to be determined by the lender, so.
I have a question for you.
Yes.
I've been hearing a lot about assumable loans. So a lot of listing agents have been advertising the property.
It's assumable.
Yes.
Yes.
I've never dealt with that before. So would the buyer need to use the seller's lender?
They
to
have
get
to
that
go
done?
through servicing to do it. So like if guaranteed rate holds the servicing of the loan, you can't come to me to do that assumption. You have to go through servicing. There's a different person that handles it. Because what the assumption is you're assuming their payments and their loan, right? So like VA loans are assumable. So if you have a listing and it's a veteran and he has a 2% rate, he can offer that as an assumption, and
It doesn't need to be a VA buyer, right?
they just have to qualify for it.
I've gotten 2 of those on.
Yes.
Really?
The one that you held up in, I've gotten 2 emails and calls, and it was the same thing. I didn't know what it was, and I was like, this is.
But be careful, because if it's a VA, then their eligibility is tied up still in that loan.
So it's taken away from their total.
Right, so you can do second use, but there's limits on how much, right? So it just depends on what they want to do.
Because they have,
So the current owner, who is in the VA situation.
Right.
Someone else is assuming that loan.
Their
but
loan.
it still stays on their ticket.
Yes.
So they can't use it for the
Right,
next
for the
one.
credits, for the next.
You can do second use VA, but again, there's limits based on
Right.
how much of their eligibility is tied to that first one. So you'd have to get with the new lender to do the calculation, yeah. But I mean, again, if it's something they would need to move fast, they have money for their next property, for down
If it's
payment.
non-VA, if it's non-VA,
So conventional loans are not assumable.
They're not.
but FHA is.
I'm not 100, I knew you were gonna ask me that question, I'm not.
So
I
right
think,
now,
maybe
they're all
so.
put into
I
VA.
think FHA is a qualified assumption. I'll have to double check that and get back to you guys.
And
I'm
so,
not-
but then again, I know you said the servicing department, but it's the servicing department for whatever lender holds that current note, correct?
Yes, correct.
So not
Correct.
necessarily the bank you went and got the loan.
Right, it could be Wells Fargo, it could be, yeah,
Yeah.
yeah, you're gonna be dealing with one of those big.
just Chase or whoever.
Yeah, that's what I said, Wells Fargo, Chase, Bank of America. I see a lot of the government loans go to Lakewood Servicing. I don't know, it's just a servicing company, so they probably have a department that just
Deals with that.
cranks through the assumptions too, so. Very cool. What other questions? Did you find the San Antonio numbers by chance? Or you didn't
It's
look?
not coming
Yeah.
up, probably, I'll send it to everybody.
I was just curious what our numbers look like as far as listing inventory. I know I've seen like our sales seem very low when they publish those couple hundred sales every week, right? So it makes me feel not as bad that I only got 2 applications, so, because as a percentage, I guess I'm still doing the same.
It's ticking up.
Same amount,
I mean,
yeah.
I got 2 offers this week on 2 of my listings.
Oh, I think things are
That's why I was
slow.
late today, because I had to,
Yeah.
tell the buyer's agent, like, hey, okay, change these things, and we got a deal, so.
Yeah.
It's, and showings are up, I mean, it's starting to turn,
Yeah.
just gotta.
Right, it's that chart, it's starting to do this, and
Yeah.
so we
Like,
need,
when I looked, I couldn't get the exact numbers, but it did show that it was ticking up.
so all those people that got discouraged because they had multiple offers during COVID, that are still sitting on the fence waiting for prices to drop, they need to get in the market like now, because we're starting to see multiple offers again.
Yeah, I mean, I have 4 listings now, 3 of them are under contract.
And because we have multiple offers and limited inventory, prices will go up. Prices are gonna go up. It's just,
San Antonio's getting great pub for the national stuff, where Austin's getting hammered. But like, Midland was number 1, San Antonio was number 2.
Oh, really?
Percentage grew up, yeah. Real estate.
Yeah.
home prices and,
Crazy.
yeah, so
Good.
we're sitting pretty right
Yeah. Yeah.
now versus.
Yeah, comparatively speaking. If we were in Austin, we'd be having a different
Yes.
It's
conversation.
interesting, I have
because-
some agent friends in Austin who said, I don't know what everybody's talking about. It is hot.
It still is,
It
but they're,
still so hot.
they saw
Too.
prices.
If you're
Yeah,
here,
that's what I was asking.
if you're in this area, things
It's
are still hot. I
crazy.
mean, it just depends on the area.
Right.
I think,
That- like any city.
yeah, I think that they are still hot, but when some of these people try to go sell some of the houses that they bought within the
Yeah.
last 2 years,
That's gonna be.
that's when they're going to find out, you
Well,
know,
that's
we
why I'm
are,
freaking out about
dying.
my lake listing
Yeah.
pricing, that she
but
I-
that's,
paid $125,000.
Yeah, Austin scares me. I saw this California Amazon guy come to Austin. He bought a half of a duplex on East 7th Street or East 11th.
right.
Like, used to be, when I went to college there, it was, you didn't go over there, right?
I went to
Like,
junior high over there, and I mean, you
No.
didn't go.
you didn't drive down that street.
Now they have a Target
He
open
paid
for food.
1.2 million for this tiny little half a duplex. Like, he's sharing a wall with his neighbor for
Right.
over $1 million.
Right.
It was his first home. So,
Yeah.
good luck. Like, hopefully he still has his job, right? Because Amazon's been laying people off
Right.
too, so.
But that's when I think they will start filling,
Yeah, probably.
is when they start. And then they decide, okay, you know, I wanna go back to California now.
Yeah,
And
yeah,
then-
whoops.
Yeah.
Like, good luck with that, because you're not,
Thank you guys so much for having me today, and hopefully we'll be talking a lot in the future. And please call me if you have any other questions.
Thank you.